Good afternoon, ladies and gentlemen, judges, and distinguished guests. My name is Anindya Ghosh. On my right is Chanel Song, and on the further right is Scott Pettigrew. And we are SPG, Song Pettigrew Ghosh Company. So the problem we're facing today is which range of suit lines would be best fit for Michael. So we've come up with 3 suit lines, and it's tailor-made, high-end, ready-to-wear, and mid-range, ready-to-wear. Thank you. We've arranged a SWOT analysis to get a further and deeper understanding of the whole case so we can come up with a better solution to Michael's problem. So for Michael's strengths, he has a business that's been established for more than 40 years. It was his father's business at first, and it was passed down to him. Michael has expanded the store, and his clients know him very well. Some of the weaknesses that the business is facing currently is that there's no further expansion room for the store, which means less fabric can be stored inside the store because the space is limited inside the store. There's also a declining tailor-made sales, and I believe the ratio is 1 to 9, 1 tailor-made suit compared to 9 ready-to-wear suits. Next slide, please. Opportunity. Vancouver is growing at a very fast rate, and there's approximately 1.25 million males in all of Vancouver. And we've come up with this number because there's approximately 2.5 million people in all of Vancouver, and there's a 50-50 ratio between men and women. So one of the biggest opportunity that we believe that Michael has is that his store is on a major street in Vancouver, and it's pedestrian friendly. This means that since it's on a major street, he has to spend less money for marketing because more word-of-mouth marketing happens, and a lot of the promotion does everything by itself. And there's an exponential growth for the ready-to-wear sales, and Scott will talk about that later on in the presentation. Some of the biggest threats is the big companies such as Harry Rosen. Harry Rosen currently owns 40% of the market shares for high-end males clothing. And Morris gets an annual income of over $2 billion per year. Next slide, please. Now, we believe that Michael was an entrepreneur from the start. This is because he was trained in the industry by his father. His father had 40 years of experience in the industry, which he passed everything down to Michael. And Michael is able to pay loyal customers. And I believe this is the case because he understands what his customers want and what his customers do not want. And this is one of the reasons that he has such a friendly and nice relationship with all of his customers. And Michael also delivers a very consistent growth and sales rate. Now I'd like to pass on the presentation to Janelle Song, who will talk about the decision criteria and all of the alternatives following. Thank you.
Thank you, Anindya. So as Anindya mentioned, we've identified 4 major decision criteria. Our first one is financial opportunity, which includes not only profitability, but also what comes in the future financial growth, as well as risk level. With an established company of 40 years, there's a risk level in any change that you do. With supplier relationship, we have a great relationship with Cascade, which is our only supplier for our ready-to-wear suits, and we want to maintain that great relationship, as well as customer satisfaction. Again, with the 40 years of business, we have built up a great customer base, and we'd like to keep them happy to continue our future growth. Next slide, please. So our first alternative is status quo, so not changing anything. In this alternative, Bakshi would not change anything about his business model, and he'd keep both the tailor-made as well as the ready-to-wear suits. As you can see with the decision criteria circles here, the customer satisfaction is positive because we're really not changing anything. The tailor-made suit buyers get to keep their tailor-made suits, as well as the ready-to-wear, they get to keep their suits as well. However, with financial opportunity, there's really no financial growth possible, especially with a declining tailor-made suit line. There's not a lot of growth if you don't do anything about that declining line. However, there is a comfortable risk level because, again, as we mentioned, not much change. And the supplier relationship is not great because anything taken away from Cascade, any line that takes away from our ready-to-wear, which in this case would be tailor-made, will not fully satisfy Hal Law. Next slide, please. So alternative 2 is replace the tailor-made with a medium price line. As you can see, it would include a lot of things like installing new racks, new change rooms, additional supply costs. However, with this, there's a lot of room for potential growth. As you can see, there's customer satisfaction because we're introducing a medium price line. People might be happy that there's something a little bit on the lower end for those customers not quite ready to purchase such a high-end product. However, the financial opportunity is not great. As you can see with our financials a little bit later, medium price will not end up being the greatest profit margin. And the comfortable risk level, there's a great risk level with introducing an entire new line. And the supplier relationship is not great because Hal Lockman is not so happy about introducing a line that's going to take away from the ready-to-wear. He projects that there's going to be a 35% decrease in the ready-to-wear suit line if we introduce this new medium price line. Next slide. So lastly, alternative 3 is to outsource our tailor-made suits and keep ready-to-wear suits. So in this, we are going to focus in on those cascade ready-to-wear and shift the business model from manufacturing to retail. So Michael mentioned that there was a big problem with space. And to fix that space problem, we're going to get rid of the tailoring in-house and put it out-house and outsource to a company. As you can see with the decision criteria, it's all positive. Customer satisfaction is great because everyone gets to maintain their suits. So the tailor-made suit buyers continue as well as the ready-to-wear. Financial opportunity, there's great financial opportunity in retail and the endless possibilities with what they could sell rather than just keeping to making suits. We'll talk about, Scott, later ties and expansion. As well, there's a comfortable risk level. With any degree of change, there's a little bit of risk. However, it's pretty minimal in this case because we don't really have to do a lot to get it outsourced. As well, the supplier relationship obviously going to be very happy because we're focusing in on their line specifically. Next slide. With cost efficiency, we're specifically going to look at the medium price suit column over there. But first, the ready-to-wear suit is sold for $400. The tailor-made suit is $560, and the medium price is $240. And with all those costs taken off, the medium price suit ends up being only a profit of $54. So that means that the total contribution margin in 2011, we need to sell 1,400 suits to just match what the tailor-made suits made. So in that instance, that's a lot of suits, especially considering we only sold 400 tailor-made suits. And we just really don't have the space for that amount of stock. And Michael also mentioned that he doesn't want to just meet that tailor-made. He wants to extend and improve on that revenue. As well, the additional costs of starting an entirely new medium price line is about $37,000. That comes from the case of getting new change rooms and as well as new supplies. That's a total of $37,000, which is pretty steep considering the other two options don't have any additional costs. Next slide, and I'll pass it off to Scott.
Thank you. So I'm sure many of you may have deduced we're going to be going with our third alternative, and that's switching from a manufacturing focus to a retail focus. And we're going to be rebranding to fit this new business model to Granville Clothiers. We're going to explain about why later. There's a lot of things happening with Michael's business right now. His tailor is aging and looking to retire. He's also making terrible numbers on his tailor-made in comparison to what he used to make. And we're seeing that decline even further. So something has to go, and we have a solution to fix this problem. So as you see, 1998, tailored suits made up a third of their business. That's outstanding, especially for custom suits. But now we see much more bleak numbers in 2012. As you can see, 9 ready-to-wear for every 1 tailored suit being made, and the added stress of having to find a new tailor with the skill level to be able to meet that demand, which is incredibly difficult, especially with the closures of sartorial academies all over Europe. Next slide, please. So our recommendation, we're going to be shifting the focus, as said, from a manufacturer to a retailer. We're going to be dropping the in-house tailor-made line immediately and start focusing strictly on the ready-to-wear collection. We're going to be outsourcing the custom-made client option to a Canadian wholesaler. There are several companies who offer this service in Canada, Montreal and Hamilton being the biggest manufacturing sites. Jack Victor is an opening price point custom suit, followed by Copley, and then Samuelson at the very top. And of course, Michael can choose which line would suit his client best. We're going to be rebranding to match the new business model. That means a new sign, which is a relatively low amount of money in comparison with the advertising budget that we set out later. And also, he's going to get a new retailer label on the inside of his coats, which in menswear wholesalers actually provide that free of charge, so it's a completely free way to rebrand your business. Okay, and we're going to have a new target market. So the target market is, of course, going to be our former clients. We want to keep them. And then we're also going to be marketing to young professionals with a medium to high-end income. Now in Vancouver, this is one of the fastest growing markets, and they have a lot of disposable income in comparison with lots of other age groups. So it's an excellent group to market the business towards. We're going to have an additional advertising budget of $25,000 for the first year to rebrand the business. That's a 40% increase. And some of the things we'll be doing with that money is going to be advertising in high-end restaurant washrooms. It's a menswear, not women's wear, so what a better gender-specific place to advertise than a washroom. Also, social media, which is going to be not actually free. It's actually he'll probably have to get his one of his employees to do it in his spare time, or him in his spare time, but it's not going to cost him any direct capital. Also, there's going to be outdoor advertising, such as billboards in affluent areas of Vancouver, like downtown Vancouver, perhaps some younger, more affluent suburbs that he would see lots of people in his target market reside. So for our implementation plan, in the short term, the 1 to 3 months we're going to be rebranding the store. That doesn't actually require much time on Michael's behalf. It's mainly just his capital. So he's going to be securing that in the first 1 to 3 months. That's contacting the retailers in order to make sure that the labels are fixed, the sign, etc. He's also going to be dropping the in-house tailor-made collection immediately. As said, his tailor can then transition into retirement if he so chooses, or he can continue working on the alterations side of things. There's going to be an advertising increase for the first year of the business, as stated earlier. And then we're also going to be outsourcing the custom option immediately and continuing that right into the long term of the business. The nice part about this alternative is that he doesn't actually have to have any stock in store for this. He can simply send away the measurements and have them sent back with a custom suit. We'll be reevaluating the business in the long term, in 12 to 36 months, and then also perhaps expanding stock if things are going well and growing as planned. So some future expansion possibilities, as noted, this would require future storefront expansion and higher capital. Now, some things that he could do, stocking dress shirts, some low-end options, Peerless, Jack Lipson, Eaton, some different brands that he could carry. Ties would be an excellent addition. That would be $50 Peerless, Dion 100, at Behar at the top, 150. And then, of course, all of these categories he can gear towards the clientele and what his customers are demanding at that time. You can also carry multiple of these if he so chooses, as we've been freeing up a lot of space in the store by getting rid of the in-house tailor-made collection. And that's all from us. We hope you enjoyed our presentation. Now we're going to open up the floor to any questions that you might have.
Good work, guys. That was awesome. My question was, do you foresee any issues finding a reliable company to outsource to? And how will you decide which company to go with? What's some of the criteria there?
Take that one. First, no, I don't. There's a lot of companies. Actually, Canada is one of the best markets for manufacturing of custom made-to-measure suits. Many people know that, but there are several companies in the garment district in Montreal, like Esco and Jack Victor Kopp. I mean, I've only mentioned a few. So there's a plethora of options. Two, reliability is not really an issue in the sense that he doesn't actually have to be having anything in stock. Worst case scenario, he sends away measurements, a suit never comes back, and then he's got to go find another way to do it. But he's not actually losing any direct capital because of that. Only maybe some minor customer relations issues. And I think that is all. Yes, that's all. And the criteria definitely would be the price range would be the biggest one. And like I said, there are three options there. S-Cohen's even lower at the low entry range at the same price he was talking about his low suits. They do some custom work as well. But I'd say price is the main one. And everything else is a custom suit, so there's no real, you get to decide as the consumer what you want your suit to be made out of and what it wants to look like. So, answers your question?
I think it's sad that you have no understanding of the clothing business. But let me focus a little bit on the entrepreneur itself. How important is the family relationship in this? And is this something you see consistent with that family business and so forth?
We believe that Michael is just like his father passed the business down to him. He wants to continue growing the business so that one day he can pass it down to his children. He's a great person, and as we can see, he wants to keep the store going. He doesn't just want to sell it. He wants to keep the tradition going, which means he truly cares about the store and the family aspect of the whole business.
So I just wanted to first clarify, so do you guys see the 2 existing tailors, are those then going to move into more of the salesperson roles in the store?
No, those are specifically tailors. We, in the case, mentions that the third one is going to retire. However, as we're dropping and outsourcing our tailor-made, that's not a problem at all, which was definitely one of the benefits we looked at, is that we don't have to retrain and get a whole other tailor. But we have our salespeople that are trained, and those tailors can stay right where they are.
So you keep the 2 tailors, and that they would have enough business to be doing, or they'd still just be doing the ready-to-wear, but just doing the alterations and that? Okay. So just wondering, ask a little bit further around, you guys mentioned social media and spare time and entrepreneur, and I'm going to guess maybe he doesn't have a lot of spare time, and I'm just wondering, do you think that he is best suited, given what we understand of maybe his age range, that sort of thing, to maybe be on social media? Or do you think he has the right skill set, or do you think there's anything additional training-wise that he needs to do or consider in that?
You're totally right. We don't think that the entrepreneur himself, Michael, would take on that role specifically. There is an established website as well, so we're assuming that the salesman, someone runs that website. There is an established website. So that person would either take on a bigger role in social media. However, we also included in that $25,000 increase in advertising, we included budget for training for that salesperson.
What's the desired future of this business? Do you see there an exit in this business going forward? What does it look like in the future?
I think India nailed it right on the head. Michael wants to keep it going and it to be a legacy business. I think that he wants to expand into creating even better garments and offering better service to his clients. I think he wants to see growth, but I don't see him wanting to just sell out. I think that the exit strategy would be passing it on to his son, as his dad did to him, and keep it going in the next generation. And of course, businesses always have intrinsic value, so if something changes in that, then you can decide to sell a lot easier than you can decide to create a legacy, which is building right now.
And do you think there's a growth strategy attached to this that's different than the one store or things like that?
As far as growth strategy, I think he just has to rely on excellence of service and excellence of the products that he offers, and drawing more people into the store because of a good reputation that the store has for providing those services really well. And I think that will, if his store does perform well, then that will generate growth, and that he can also gradually elevate the level of the items that he stocks in the store, which will create more revenue.